Hello everyone. Today we are going to learn an important topic from the income tax subject, allowances in salary. This topic comes under the chapter income from salary and it's play a key role in understanding how salary income is taxed. I am Dr. G. Selvalakshmi, Assistant Professor in Commerce, Sri Sharada College for Women Autonomous, Salem. Let's begin with a simple question. When we say salary, most of us think it's just a basic pay. But in reality, salary also includes allowances, which are paid to meet specific expenses, for example, rent, travel, or children's education. So these allowances are classified into three categories or three types. The first one is fully taxable, and then partially exempted, and then fully exempted. And what is an allowance? An allowance is a fixed amount of money that the employer pays regularly to one employee to help cover personal or official expenses. For example, house rent allowance, that is HRA, then DA, dearness allowance, and CCA, it is called city compensatory allowance, are all types of allowances. Then we move on to the types of allowances. So these are the three categories will focus on fully taxable, partially exempted and fully exempted. Let's take a closer look at each one. So first one is fully taxable allowances. These allowances are fully included in taxable salary with no exemptions at all. For example, a dearness allowance we consider it is to manage inflation, that is city compensatory allowance for employees in expansive cities they provide. For a overtime allowance is provided for extra work, tiffin or lunch allowances. So these are added entirely to your salary income while calculating the taxes. Then partially exempted allowances. So these allowances have a limited exemption and the remaining amount is taxed. So let's take the most common example here, that is HRA. We know well, house rent allowance. It is given to help employees pay rent, but not the whole HRA is tax free. Only a portion is exempted based on the following three rules we have to follow. For a HRA exemption calculations, we have to follow the least of these three. The first one is actual house rent allowance received by the employee. And then we consider for the second least is the 50% of employee. If living in a metropolitan city, then we consider for 50% of salary. In case the employee is working in non-metropolitan city, then exemption will provide 40% of the salary. Then rent actually paid and minus 10% of salary of the employee. Let's understand this with some examples. Here see, the salary is rupees 30,000 per month. The house rent allowance received is rupees 12,000. Rent paid is rupees 15,000. The city also a non-metropolitan city we considered for example. See, the calculation for exemption is which one is least for this means actual HRA means 12,000. Okay, this is non-metropolitan city. So the 40% of salary is allowed for exemption. So we calculate 40% from the 30,000 of salary is also 12,000. Actual rent paid amount given in this example is 15,000 and 10% of salary is 3,000. So rent paid minus 10% of salary is equal to 12,000. So 12,000 is exempted. Since all three values are the same here, the exemption is 12,000. If HRA received was more than that, the extra would be taxed. Other partially exempted allowances are some few more allowances under this category. For example, children education allowance, 100 per month per child, up to 2 children is allowed. Oh, for example, 100 per month and per child, maximum of 2 children, no. So the per year the children education allowance provided 2,400. Then another exempted allowance is hostel expenditure allowances. It is allowed for maximum 2 children, and per child they provide 300 per month. So totally 7,200 per year is allowed exemption. Then transport allowance, it is provided for disabled employees particularly. Rupees 3,200 per month is allowed. Only the limits specified or exempt. The rest of the amount is taxable. Then we move on to fully exempted allowances. Now let's see the third type, that is fully exempted allowance. These are not taxable at all. For example, a foreign allowance, so paid to the government employees posted in abroad. The allowances to judges of High Court and Supreme Court. The United Nations employees allowances. So these are not included in the salary while calculating the taxes. Here the summary table is helpful for your quick revision. See the table. The first category wise fully taxable, partially exempted and fully exempted. For whether it is taxable, yes, fully 100% it is taxable for example DA, CCA and overtime. Then partially exempted is to a limit exemption to a limit. For example, HRA, children's education allowance, like that. Then fully exempted means that is 100% exemptions. It is not at all pay any tax. For example, foreign allowance and the United Nations allowance, etc. See, conclude this topic. Here I have to summarize. Allowances are an important part of salary. It's a major component of the salary also. Some are fully taxed and some are partially exempted and a few are fully exempted. So understanding these helps us correctly calculate the salary income under the Income Tax Act. And thank you all for your attention on this topic to understand better way in allowances in the chapter salary.